Good morning, everybody. Welcome to another day Market brought to you by Mike Bjork. Today is Hump Day. It's Hump Day, and it's Wednesday, February 27th. Wow, we got almost a month end here. We got a couple items here, not a lot here. We got the pending home sales for the month of January. So in December, things dropped by 2.5%, but we had a pretty surprising number. It jumped up quite a bit at 4.6% in January. So these are kind of a good forward-looking indicator as to where home prices or homes are moving. And there's two reasons behind this from the president of NAR, or economist from NAR. Basically, he said that we had more inventory come in to the market. We're still relatively low, but it was better. And interest rates kind of dropped around that time period. So if you recall, around September, October, rates got probably to the highest point of the year. And then around November, it started declining a little bit. In December, we had probably our biggest drop, and it kind of worked its way down a little bit. So rates have kind of improved since that period, and hence kind of helping out the home buying process, along with, of course, a little bit more inventory out there as well. And then another indicator is, it wasn't mentioned, was the stock market. Stock market wasn't doing so well during that period when the rates were high, and have since been kind of in improvement here, especially in January, where I'll touch on a little bit. But in any case, that's another indicator of people, if they start seeing their portfolio decline a bit, and sometimes they use that as a part of their down payment, they may tend to want to hold off any home buying decisions if they see that declining, as it's a nice little cushion for them. To kind of move on here, we got factory orders in December. So in November, it dropped 0.5%. Forecast calling for December, it was a 0.5% increase, but it only went up 0.1%, so almost unchanged here. So definitely improvement over November, but came in a little disappointing here in December as well. So let's go take a look here at the headline news. Stock market's down this morning. I kind of was looking at it. It's actually been in a overbought position for quite a while here. It's since mid-January. It's been hanging above these stochastics, and remaining in a position where it's been basically overbought position for a while. It's kind of looking to me that maybe it's starting to lose a little steam a little bit, unless we get some really big news like perhaps the China agreement talk. But we'll touch on that in a minute here. But let's begin right here. Speaking of such, we have the Jerome Powell second day of testimony. So if you recall, yesterday he was talking to the Senate. Today he's talking to the House as part of Congress, giving their updates. We don't expect any change from what he said yesterday. And then here we also got Lighthizer. He's been one of the two, him and Mnuchin have been the higher levels talking with China in regards to the talks, and he's giving his testimony before the House Ways and Means Committee here, talking about agreements with China, giving them kind of the updates and sentiment. President Trump's also meeting with President Moon from North Korea in Hanoi today, which is obviously a good scene. We've been having better relationships with them, over the past year, which is obviously a good thing for everybody involved. But however, we got some tensions building up here between India and Pakistan. That's kind of has investors. Anytime there's some geopolitical things that pop up like this, they kind of get a little leery. So unfortunately, some tension been building up with India and Pakistan. There's been reports that Pakistan shot down two India planes over Kashmir, and it seems like a lot of it has to do with Kashmir. Unfortunately, this is kind of building up. And then something else I didn't put up there yet. It's they are kind of watching it, but it's not something in the forefront yet because we got some time. Is of course the EU and the divorce between the Great Britain and EU, and having a deal in place for trade between the two as they move away. So we'll have to kind of wait and see if there's one done before the deadline of March 29th, I believe is the date. Let's see how this is affecting the bond market. Bond market is down. We are testing its 25-day moving average. We're down about 12 basis points, which will basically translate, a little higher pricing today in interest rates as a result. So we're kind of hitting up, kind of working up against the 25-day moving average. It has been working as a good floor of support, which is a good sign. We are in between the stochastics here, which is obviously good as well. When I talked about the stock market being an overbought or oversold position, it's been hovering above the green line here since like mid-January, from like right about here all the way across in this position here. So it's been kind of this upper level above the green line here, which means overbought position, and then anything below here is considered oversold position. Here we got the treasuries. Treasuries are up today. We're up to about 2.69, and again, it is touching its 25-day moving average, trying to break above it. It has been a pretty good ceiling of resistance, kind of keeping a lid on it, which has helped mortgage-backed securities with their increase of their trend as well. So, but for the most part, as you can see, we've been kind of the sideways pattern, kind of fluctuating between, that 10 to 14 basis points, between here. So it hasn't been a huge amount of fluctuation here, but more of a sideways pattern here for quite some time here, for about 2 weeks. All right, so rates are slightly higher today. That pretty much wraps things up. But if any other things pop up, if you want to get updates, just come over to Twitter. You can follow me at Mike Bjork, and I will post them over there. You guys have a great rest of your day. Thanks so much for watching. See you guys tomorrow. Bye-bye.